Japan's central bank holding steady. The committee there left monetary policy unchanged in a policy meeting. Even though new economic figures point to a weaker than expected recovery, the prime minister there used a formula of strong government spending and loose monetary policy, and that has helped. But economists say he has to do more to keep the economy growing. The Bank of Japan has already trimmed its economic forecast for the year, and Mike Firn has more on what prompted this pullback.
Weak demand for exports and a dip in domestic spending may cut Japan's economic growth in half in the next 12 months. The Bank of Japan lowered this year's forecast to 1.1% compared to January's 1.4% estimate, lowered its 2013 estimate to 2.2% from 2.7%. But the central bank says the negative effects from this month's sales tax increase should be over by the summer, with higher wages encouraging shoppers to keep on spending. If overseas demand also picks up, the bank says Japan's economy will grow 1.5% in fiscal 2015 and 1.3% the following year. Concerns about slowing growth have led investors to sell Japanese stocks this year. The Nikkei 225 is down 12% after rising 57% in 2013. JP Morgan's local head of equity research says it's up to the government, not the central bank, to convince investors it's worth putting money in Japan.
Stock markets look ahead, and we've had a tremendous earnings recovery, and the market basically has said, fine, good earnings recovery. Where do we go from here? Will Prime Minister Abe deliver a corporate tax cut? Will Prime Minister Abe deliver deregulation measures that allow companies more profitable investments here in Japan? So that's the discounting that's going on right now.
Cole says he doesn't expect any more quantitative easing from the Bank of Japan. Board members voted unanimously Wednesday to stick with the loose monetary policy announced 12 months ago. Mike Firn, CCTV, Tokyo.